Good evening. This is Parikshit from Currency and Commodity Advisor Desk. I welcome you all for the today's training on currency market. Hope my voice is audible to all. Please type yes in the box if you are able to hear my voice. Please type yes in the chat box if you are able to hear my voice. And also let me know if you are able to view my screen. Thank you. So participants are still joining in. So we will be starting in next few minutes. Thank you. We will be starting in another 3-4 minutes since the participants are joining in. Thank you. So good evening. This is Parikshit from Currency and Commodity Advisor Desk. I welcome you all to today's webinar on currency market. Hope you are able to view my screen and my voice is clear. Please type crystal in the chat box if my voice is audible to you all and you are able to view my screen. There was some connectivity issue. Now it's proper. Hope my voice and hope my screen is visible. So we will start our presentation now. So जैसे कि आपको पता रहेगा डेरिवेटिव्स अलग अलग प्रकार के रहते हैं, जैसे कि कमोडिटी डेरिवेटिव्स है, इंटरेस्ट रेट डेरिवेटिव्स है, फिर स्टॉक डेरिवेटिव्स, इंडेक्स डेरिवेटिव्स। लेकिन आज हम लोग बात करने वाले हैं अबाउट करेंसी डेरिवेटिव्स। वी आर गोइंग टू टॉक अबाउट करेंसी डेरिवेटिव्स टुडे इन डिटेल। So these are the most popular currency derivatives for forwards, futures, options। आज हम बात कर इंडिया में अगर देखा जाए तो ये पिक्चर बिल्कुल। तो सॉरी फॉर द डिले, कुछ We are extremely sorry for the delay. Extremely sorry for the delay because of some internet connectivity issue. There is a delay. We are again starting our currency session. So I welcome you all to today's webinar on currency market. तो ये अलग अलग प्रकार के डेरिवेटिव्स है. आज हम लोग बात करने वाले हैं अबाउट करेंसी डेरिवेटिव्स. You will be talking about currency derivatives today. These are the most popular currency derivatives. लेकिन आज हम लोग बात करने वाले हैं अबाउट फ्यूचर्स एंड ऑप्शंस. सो जैसे कि मैंने बताया कि ग्लोबल करेंसी मार्केट में सबसे ज्यादा वॉल्यूम करेंसी में ही होता है ग्लोबली. अगर देखा जाए तो ऑन एन एवरेज $6 ट्रिलियन का वॉल्यूम है. कमोडिटी में होता है 2 ट्रिलियन का वॉल्यूम और इक्विटी में हो रहा है 1 ट्रिलियन का वॉल्यूम. लेकिन इंडिया में ये पिक्चर बिल्कुल अपोजिट है. इक्विटी में सबसे ज्यादा पार्टिसिपेशन है, फिर नंबर आता है कमोडिटी का और लास्ट में नंबर आता है करेंसी का. सो ग्लोबल करेंसी मार्केट 24/7 चलता है और ये सिडनी में चालू होकर सैन फ्रांसिस्को में एंड होता है. इट इज वन ऑफ द लार्जेस्ट एंड द मोस्ट लिक्विड मार्केट्स इन द वर्ल्ड. तो इतना बड़ा मार्केट है, इतना बड़ा अपॉर्चुनिटी है, तो हम लोग क्यों इसको कैप्चर नहीं करते. हम लोग को जरूर इसमें पार्टिसिपेट करना चाहिए, विच इज वन ऑफ द लार्जेस्ट एंड द मोस्ट लिक्विड मार्केट्स इन द वर्ल्ड. तो कुछ गलत फहमियां हैं अबाउट करेंसी मार्केट्स. लोगों को लगता है कि इसमें काफी ज्यादा पैसा लगता है. So people think that you need large sums of money to trade in currency market, but ऐसा नहीं है. For starting currency you need only 2000 rupees. If you have 2000 rupees in your account, you can easily start trading in currency. Secondly, settlement is not in foreign currency. Purely it is settled in INR. Whether you trade in USD, Euro, GBP or yen, कोई भी करेंसी में आप ट्रेड करते हो, सेटलमेंट प्योरली INR में होता है. So what are currency derivatives? So currency derivatives basically is buying and selling of currencies on exchange platform, similar to what you do in equity derivatives. You buy and sell Nifty, Bank Nifty on exchange platform. Similarly, in currency derivatives, you buy and sell currencies on an exchange platform. These are the pairs available for trading in currency market. There are 4 INR pairs: USD INR, Euro INR, GBP INR, and JPY INR. And 3 cross pairs available: Euro dollar, Pound dollar, and USD JPY. But 90 to 95% of the volume happens only in USD INR pair. Rest of the pairs are not that much liquid. So I will advise each and everyone to concentrate more on USD INR pair. So this is the price quotation for currency derivatives. तो किस तरह से प्राइस कोट होता है उसके बारे में हम लोग जानेंगे. So here I have given an example of USD INR. So USD/INR. So USD is the base currency and INR here is the term currency or the quote currency you can call. So for example, if the price of USD INR is 82 rupees, that means for buying $1 you have to pay 82 rupees. So these are the various market participants, those who participate in currency market. First is traders, second is hedgers, and third is arbitrators. So traders are those market participants who trade with a specific view of the market, and hedgers are those who trade in this market to hedge their forex exposure. For example, importers and exporters. And third kind of participants are arbitrators. So mostly traders have a particular view in the market and they trade according to that. So if a particular trader has a view that today dollar will go up, then he will buy dollar. Another trader has a view that dollar will go down, then he will sell dollar. And hedgers, what they do, exporter will always sell in the market and importers will always buy in the market. So exporters basically sell in the market because they are expecting some revenue in dollars in their bank account. So if the exchange rate goes down, they may incur loss. So to hedge that loss, they sell in the market. And similarly, importer buys because he has to make payment in future. So if the exchange rate rises, then he may suffer a loss. So note down one thing: exporter always sells in the market and importer always buys in the market. So these are the major currency exchanges that are available for trading in currencies: National Stock Exchange and Bombay Stock Exchange. So now we look at why you should all focus on currency derivatives or the currency market. क्यों आपको currency market देखना चाहिए, करना चाहिए? First of all, lot size is standardized. So if you see in equity, the lot size of each and every scrip is different. L&T का अलग है, SBI का different है, फिर Reliance का अलग है, निफ्टी का lot size अलग है, निफ्टी का lot size अलग है, फिर बैंक निफ्टी का अलग है. But here in currency derivatives, lot size is standardized. So lot size, I will give it to you on chat box. Lot size is 1000 for all the currencies. Whether you paid USD INR, Euro INR, GBP INR or all the cross currencies, lot size is same of 1000. Then there is extended market time. The market runs from 9 to 5 p.m. Monday to Friday. After the equity market closes at 3:30, clients can easily take positions in currency market. Margins are also low, around 3 to 3.5% is only the margin you pay for creating positions in currencies. So currency में margin काफी कम है. 2000 rupees is the margin you need to pay for buying the currency, that is USD INR. We will take the question and answers afterwards. Thank you. So margin is low, plus you can trade in multiple exchanges. You have two exchanges, NSE as well as BSE. Then pricing is transparent because it is exchange traded, and costing is also low as compared to equity because there is no security transaction tax in currency derivatives. So this is the currency contract specifications. This is one of the main slides that you all must know. ये बहुत महत्वपूर्ण slide है. So as I told you, lot size is 1000 for all the currencies, but lot size for JPY is 1 lakh. But the price that you see on your screen for JPY INR is 100 yen. I once again repeat, lot size of JPY INR is 1 lakh, but the price that you see on screen for JPY INR is for 100 yen. So if you divide 1 lakh by 100, it comes to 1000 only. So as far as calculation of MQM is concerned, unit of trading is 1000 only. Trading hours are 9 to 5, Monday to Friday, as I told you earlier. Margins are 3 to 3.5%. USD INR is around 2000 rupees current margin. Euro INR margin is currently around 2800 to 3000 rupees. GBP INR margin currently going on is around 4000 rupees. And JPY INR margin currently is around 3000 rupees. You can visit Trader Terminal and you can easily see what is the current margin going on. So in futures, these are the margins. Plus you can trade in options also. When you buy options, you only pay a premium. And when you sell options, if somebody wants to sell an option, then he will have to pay full margin of futures. So for example, if client wants to sell 82 rupees 50 paisa call option or put option, he will have to pay 2000 rupees as margin for one lot and he can sell that option contract. So now we come to what is called as the tick size. So this is very, very important. Tick size is 0.0025. That is 1/4 of 1 paisa. So tick size is different in currency. In Nifty or Bank Nifty, tick size is 5 paisa. Here it is 0.0025. So if I calculate one tick plus or minus 0.0025 into one lot into 1000 is the lot size. So it is around 2.5 rupees. So 2.5 रुपए का plus minus होता है 2.5 rupees plus minus in the ledger if currency moves by one tick, and similarly if it moves by 1 paisa, 0.01 into one lot into 1000. So it is rupees 10. So in 1 paisa there is 10 rupees plus or minus in client's ledger. So this is about the tick size. Then the strike price interval is 25 paisa in NSE and 10 paisa in BSE. The settlement happens on T+1 basis, daily settlement. Client position लेता है. Client has bought USD INR at 82.50 for example, and the closing is 82.65. Then the 15 paisa profit will be credited to his account on the next trading day, and he can see the same in his ledger. Then the contracts are available for 12 months, and for options there are 3 serial month contract and 3 quarterly contracts. But liquidity is there in first 2 months in options contract, and in futures contract there is liquidity for all the 12 months. Basically, ये market बनाया गया है for hedgers. This market is specifically for hedgers only to hedge their forex exposure. Suppose an exporter or importer has some import or export payment to be done in December, then he can hedge his position in December contract right now. So right now it is going June 2023. So till May 2024, you have contracts for trading in currencies. So settlement is purely in INR, as I have told you earlier. Then expiry date funda is a little different in currency market. So people get confused regarding the expiry date. So the expiry date is 2 days prior to the last working day of the expiry month at 12:30 p.m. So I will write down in the chat. So expiry date is 2 days prior to the last working day of the expiry month at 12:30 p.m. Note down the time. 12:30 p.m. is very, very important, because the market runs from 9 to 5, but on expiry day, the contract expires at 12:30 p.m. And suppose a client does not square off his position on the expiry day, then the position is automatically squared off as per the RBI reference rate on the expiry day. So earlier monthly contracts were available for trading in currencies, but with effect from 2018 onwards, weekly contracts are also available for trading. So weekly contracts are available in USD INR and all the other INR pairs. But as I told you earlier, USD INR pair has the most liquidity. So I will urge you to concentrate only on USD INR pair. There are 11 weekly contracts, and the last working day or the expiry day of the weekly contract is every Friday at 12:30 p.m. So now we come to where you should trade, whether you should trade in BSE or NSE. We will see what is the costing difference between BSE as well as the NSE. So if you trade in futures, the charges are 25 rupees exchange transaction fees per crore in BSE, whereas in NSE it is 90 rupees. So including GST, the total costing for BSE comes to around 30 rupees, whereas in other exchanges, that is the NSE exchange, it comes to around 106 rupees. So if you trade in BSE, you save around 76 rupees per crore. So around 80% of your charges you can save by just trading in BSE currency exchange. So BSE में काफी अच्छी liquidity है. BSE has lot of liquidity in USD INR pair. You can trade in BSE USD INR currency and save a lot of money. So in options, the transaction charges is 100 rupees per crore in BSE, whereas in NSE it is 3500 per crore. So total charges in BSE are 118, whereas in NSE it is around 4130 rupees. So if you trade in BSE currency options, you save around 4000 rupees per crore. So that is almost 95% of your savings. So with effect from 6th of March 2023, BSE exchange has introduced change in strike price interval. Earlier, the strike price interval was 25 paisa, but now they have revised it to 10 paisa. But in NSE, the strike price is still 25 paisa. So earlier, the strike price intervals were, say, for example, 82, 80 to 25, 80 to 50, and so on. But from 6th of March in BSE segment, or the BSE currency exchange, strike price have been revised to 82, 82.10, 82.20, 82.25, 82.30 and so on. So the major benefit is that the client can trade in 10 paisa differential rather than waiting for 25 paisa movement. That is the best thing. So client can easily trade in 10 paisa movement and get faster entry and exit in the options contract. So these are the cross currency contract specifications. So cross currency was launched in 2018. Euro dollar, pound dollar and USD JPY are the three pairs. These are the contract specifications. So lot size, as I told you earlier, is 1000 for all the currency pairs. Even cross currency has lot size of 1000 only, but cross currency has a very limited volume. On an average, daily volume for currency market is 2 lakh crores. Out of that, only 50 to 100 crores volume is contributed by the cross currency contracts. So it is roughly about 0.03 to 0.05%. So very less participation in cross currency contracts. So there is low liquidity in cross currency contracts. So I will advise you to trade cautiously if someone is trading in cross currency, because there is low amount of liquidity. Market timing is same as INR. The margin is slightly higher, 4 to 5%. So in euro dollar, the current margin going on is around 3,700 to 4,000 rupees, whereas in pound USD pair it is around 5,000 rupees, and in USD JPY it is around 4,500 rupees. So you can trade in futures, and there is only liquidity in first month contracts, and here also there are 12 months contracts available, but liquidity is there only in first month. So here the tick size again is different as compared to INR pair. So tick size for cross currency is 0.0001 for Euro USD pair and GBP USD pair. And for USD JPY, tick size is 0.01. So I again repeat, tick size is 0.0001 for Euro dollar and pound dollar pair, and for USD JPY it is 0.01. Settlement is same, T+1 basis, and it is also settled in INR, and expiry date is also same for cross currency contracts. And if you don't square off the position automatically gets squared off on the expiry day as per the RBI reference rate. So now we will understand what is the tick size in cross currency contracts. Many people get confused about how to calculate cross currency. So tick size, as I told you, is 0.0001 for euro dollar, pound dollar, and for USD JPY it is 0.01. So contract size is 1000. 1000 is the lot size. So suppose if euro dollar pair moves up by one tick. So here I have given an example. 1.0914 is the price going on. For example, if the euro dollar pair moves up by one tick to 1.0915, what would be your P&L, or what would be the plus or minus in client's ledger? So the effect would be USD 0.0001, but this amount is in USD, so you have to convert this to INR. So for converting that into INR, we use the RBI reference rate. So for euro dollar and pound dollar, we use USD INR reference rate, and for the third pair USD JPY, we use JPY INR reference rate. So for example, if today's reference rate is 82 and Euro USD moves up by one tick, then approximately 8.2 rupees would be the plus or minus in client's ledger for euro dollar pair and pound dollar pair. Similarly, if the reference rate for USD JPY is 0.61, then the value of one tick would be 6.10 rupees. So approximately if USD JPY moves up or down by one tick, there would be 6.10 rupees plus or minus in client's ledger. So this is how we calculate the P&L in cross currency. Value of one tick is equal to tick size into contract size into INR conversion rate. So the RBI reference rate you can get the details on NSE website. Daily in the evening, you can check out what is the today's reference rate if someone has traded in cross currency contracts. So these are the various factors that affect currency movement or the exchange rate movement. So first is change in government. So for example, there is election in US or election in India that can affect exchange rate. Then there are fundamental factors such as the GDP data, inflation data, trade balance, crude oil prices, gold prices. So most important factor is two most important factors you need to track is crude oil and gold. Very important factors that all of you must track while trading in currencies, because crude oil and gold prices are quoted in dollars. So when prices move up or down, it directly affects the exchange rate. And as you know, India is a net importer of crude oil. So we import around 80 to 90% of our crude oil requirements. So whenever crude oil prices go up, our demand for dollar shoots up. And whenever demand shoots up, the price of that currency will shoot up. And similarly, if the crude oil prices go down, our dollar demand will go down and USD INR may fall. Similarly, gold prices are also quoted in dollars. So you have to track crude oil and gold while trading in currencies. So next thing is capital flows, FII inflows, FII outflows. What are the inflows coming in? What are the outflows going? Suppose FIIs are investing in Indian equities. That means they are pumping in dollars in our market. So dollar ka supply badega, and if supply rises, then the dollar price will go down. And suppose FIs are removing money out of India and investing somewhere else, then the demand for dollar will go up, and similarly the price of dollar will rise. Now there is RBI intervention also. You have to see whether RBI is intervening in the market. Whenever there is extreme volatility, RBI intervenes in the market and tries to stabilize the exchange rate. Because if there is too much volatility in the exchange rate, it is harmful for country as well as exporters and importers. So RBI intervenes in the market from time to time to stabilize the exchange rate. Then there are policy decisions such as the RBI policy meeting, then US Federal Reserve policy meeting, Bank of England policy meeting, Bank of Japan meeting, and so on. You also have to see global currency movements such as the euro dollar movement, pound dollar movement, USD JPY movement, and so on. You also have to track global and domestic stock markets such as the US market, that is the Dow Jones, then Indian markets such as the Nifty and Sensex. So these are the data to watch for trading in currency market. There are some international data and some domestic data. So international data such as the GDP. So for example, you may track US GDP or UK GDP, then employment data, manufacturing data, central bank meetings such as the Federal Reserve meeting, what is the trade balance. Then in domestic data, you can track RBI policy meeting plus our inflation data, our wholesale inflation data, CPI data, IIP data. What is the India's foreign exchange reserve, whether they are rising or they are going down, our current account deficit. Then what are the FII doing in our market, whether they are taking out money or pumping in money in our market. So these are the data you must track. And for tracking the data, I will give you one website, forexfactory.com. This is the website that you must use for tracking all the data. So forexfactory.com पे जाके आप सब data ये देख सकते हो. Which are the important data for which currency, what is its effect, all that you can find on this website, forexfactory.com. So now we will see what is the difference between forwards or the over-the-counter market and exchange-traded currency derivatives. Why exchange-traded currency derivatives is better for clients. First of all, OTC contracts are customized and tailor-made, whereas exchange-traded currency derivatives are standardized. So standardized lot size है 1000 का, plus the contract size in OTC is quite large. Minimum contract size is USD 1 million, but in exchange market contract size is as small as USD 1000. In OTC market, there is lack of transparency and differential pricing. So, for example, if there is one large exporter and importer, for example, Reliance, he may get a better pricing as compared to a smaller exporter or importer. But in exchange market, there is complete price transparency. Whether Reliance is hedging his position or small importer or exporter is hedging his position, he will get the same rate which is quoted on the screen. Then the underlying exposure is mandatory if you have to hedge with bank, but in exchange traded currency derivatives, there is no underlying exposure required. Then in OTC market, only hedging is permitted, no trading is permitted, but in exchange traded currency derivatives, hedging, trading, and arbitrage all are possible and permitted. Then documentation is lengthy procedure for forwards market and it needs to be done for each and every transaction. But with exchange, there is only limited documentation, that is one-time documentation in the form of KYC. So transaction charges are also high in over-the-counter market or forwards market, and whereas in exchange traded market, these are quite low. Then bid-ask spread is also high in OTC market, and in exchange traded market, it is as low as 1 tick or 0.0025 for the near month contract. Then in OTC market, contracts can be cancelled only on the day of maturity. And in exchange traded markets, the contract can be squared off any time before expiry. So in OTC, if the contract is expiring on 31st of May, client is only allowed to square off on 31st of May. But in exchange, if he trades in a contract for 27th of June and his payment comes on 15th of June, he can square off on 15th of June. But in bank, he cannot do that. He has to square off on the last day only. Then cancellation quote is allotted by the bank. But in exchange traded market, there is price transparency. So he gets a fair square of price. स्क्रीन पे जो भाव कोट हो रहा है वही भाव पे वो ऑटोमेटिकली स्क्वायर ऑफ कर सकता है, बट इन बैंक the bank dealer quotes in the price for square off and he has to square off at that rate. There is opportunity loss when the remittance date is not confirmed. So for example, if client is expecting some remittance in the month of June, but the date is not confirmed, and if he hedges for 27th June contract and payment comes on 15th of June only, he will have to wait for 12 days to square off his contract with bank, because in bank he cannot square off before 27th of June. But in exchange market, he can square off on 15th of June when the contract or his payment comes in the bank, and he can immediately call us and he can square off on 15th of June. So there is no opportunity loss in currency derivatives exchange traded market. So why people hedge in currency market? So this market basically was there to hedge their exports and imports. ये market बनाया गया था for exporters and importers basically to hedge their foreign exchange exposure. So what are the benefits that exporters and importers get in exchange traded currency derivatives? They can trade both in futures and options. In banks, you are only allowed to buy options. You cannot sell options in banks, but in exchange traded currency derivatives, you can buy options as well as sell options. Then bid-ask spread is as low as 0.0025. There is high price transparency. Then you can hedge as small as $1,000, as I have told you earlier, and only KYC is required when you trade in exchange traded currency derivatives. So this is one example in I have shown you. This is a hedging example regarding futures. There is one importer. Suppose an importer wants to execute an import order on 1st of July and has an outflow of $1 lakh to be paid on 30th of September. And the spot rate of USD INR on 1st of July is 80 rupees and the September future is currently quoting at 81 rupees. What is the risk of importer? Rupee may depreciate and import proceeds of 1 lakh will be converted at a rate higher than 80 rupees. So suppose if importer doesn't hedge and if the rate goes higher than 80 rupees on 30th of September, then he will have to pay more and he may incur a loss. So what he does to hedge his foreign exchange exposure. He buys September future at 81 rupees. Since he is an importer, he will always buy. So he buys September futures at 81 rupees on 1st of July. And at the end of maturity, that is on 30th of September, if the bank rate comes at 79 rupees, then what will be the impact on futures account? He will square off at 79, so there will be 2 rupees loss to client. But at bank, he will have to pay 79 rupees only. So there will be 2 rupees gain in his bank. So net, there will be no profit, no loss for the client. And similarly, if at the end of September, the rate comes to 83 rupees, so he will sell September futures at 83 rupees because maturity rate is 83 rupees. So he will gain 2 rupees in the exchange platform, that is the futures account, but similarly he will have to pay 2 rupees extra in bank. So net, he will neither lose or he will neither gain. So if the rupee moves either ways, the corporate is hedged at a fixed rate. So what we get from this example, exchange rate किधर भी चले जाए, उसका रेट 81 रुपीज फिक्स हो जाता है. Whenever he trades in futures, his exchange rate is fixed at 81 rupees. Whether exchange rate moves to 85 or it comes down to 77, his rate will be fixed at 81 rupees on 1st of July whenever he enters the contract. So this is a similar example regarding exporter. We will not go into details about this. Exporter हमेशा sell करता है, exporter will always sell. That is the only difference. So these are the various trading platforms that are available for trading in IIFL securities. First is the IIFL Trader Terminal. Second is the IIFL Markets app. And third is the IIFL TT Web. Client can trade seamlessly through all the three trading platforms. So this is the screenshot of IIFL TT Web which I am showing you right now. Client can fire orders for delivery. Client can fire orders for intraday, and he can fire day order as well as IOC order. But mostly you should fire day order only. And whenever you log in into IIFL TT Web in Market Watch, here you can see currency in the drop down menu, and in the search bar add whatever currencies you want to. So I have added here USD, INR, Euro, INR, GBP and JPY. You might not be able to see because the font is small. So I have added 4 currencies. Suppose if client wants to buy, then he will click on plus symbol here, and whenever he clicks on plus symbol, buy order window will open. If he wants to buy, here there is order for delivery, then total quantity 1, 2, 3, 4, 5, 10, 15, 20, whatever clients wants, plus the price he can quote whatever price he wants to buy at. Suppose for example the current market price is going on at 82.60 and client wants to buy at current market price, he will put 82.60 and place on buy, and the order will get executed. Suppose client calls and tells that he wants to buy not at the current market price but at a lower price. Say for example current market price is 82.55 and client tells that he wants to buy at 82.50, and in price he has to enter 82.50, place on buy, and that order will go into the pending orders, and whenever 82.50 is shown on the screen, his order will automatically get executed. So we get many queries regarding how to activate the currency segment. Client tells that मेरा equity derivatives activate है, currency derivatives activate नहीं है, commodity भी activate है. So earlier client had to fill one pager form along with 6 months bank statement and submit it. But now client can directly do that via the TT web and IIFL market app seamlessly without any paper or documentation. So client has to go to my account, profile, my details, and in derivatives activation, he has to take on NSC currency and BSC currency and submit along with the required documentation, that is the 6 months bank statement or income tax statement, and then within 2 working days the account will get activated. Similarly, he can do the same thing via the IIFL Markets app. He has to go to My Profiles page in IIFL Markets app, where he can view his account details. In that, he has to select activate new segments. In that, he has to take on NSE currency and BSC currency. And once he takes and submits with the required document, that is the 6 months bank statement or demat statement or income tax statement, his account will get activated within 2 working days. So what we at IIFL do? IIFL is one of the leading brokers in the stock markets, and we offer currency derivatives to retail, HNI, as well as the corporate clients. We have focus on corporates with forex exposure. We have a dedicated dealing and advisory desk at Andheri head office. So what kind of support do we provide to all our branches, franchises, staff and clients? First of all, we provide Currency Mantra on a daily basis. In the morning, before the market opens, Currency Mantra is delivered to all the clients, branches, franchises, as well as the RMs on their registered mail ID. In that, you get news and news about currency. What are the important news you should track about currency? Then what was the previous day's report? What are the technical levels, that is the support and resistance level for today's session? All that information is provided in Currency Mantra, that is delivered to all the market participants before the market opens on their registered mail ID. Then we give product knowledge. जैसे कि अभी ये currency session हो रहा है, we conduct similar product knowledge on a regular basis so that client gets knowledge about currency. Then we also provide training on trading platform, that is our trader terminal. Then we provide execution backup support from our dedicated dealing and advisory desk at Andheri head office. We also provide fundamental, technical, intraday and positional calls via research team and advisory desk. So these are the important websites that one needs to know. First is indiainfoline.com, obviously our website. Then 3 important websites: forexfactory.com, fxsuite.com and investing.com. So Forex Factory you can refer for data purpose, tracking all the data, and for fundamental news you can visit fxstreet.com and investing.com. These are the 2 important websites you can visit. So last but not the least, there is one thumb rule of trading. Always maintain a stop loss. Always put a protective stop and trail your stop loss so as to minimize your risk. बहुत सारे clients क्या करते हैं, पोजीशन तो ले लेते हैं लेकिन they don't adhere to discipline and don't maintain a stop loss. So I will urge each and every one of you to trade with a strict stop loss so as to minimize your risk. So these are our contact information. This is our contact information. So our direct desk number is 02266810111. This is our trade line number and our advisory desk number. Currency advisory desk number is 02266810111 is our currency trade line number, and 02266117574 and 7577 is our advisory desk number. You can call anytime during market hours. Myself, Parikshit and Yogesh are available entire day during the market hours to help you regarding currency. If you face any issues, if you have any queries, we would be happy to help you. So client भी directly trade line पे call करके trade कर सकता है, but there is only one condition: client has to call from his registered mobile number and he has to tell us his client code. Then we will log into his client code and trade whatever clients want to trade. So these are the desk numbers. I will once again repeat: 02266810111 for trading purpose, and for advisory purpose 02266117574 7577. So that's it from my side. So this is the end of my presentation. So now if you have any queries, I would be happy to answer them. Thank you. So if anyone is having any queries, you can ask now. So yeah, margin file you will get on IFLTT trader terminal. You can go to markets, span margin calculator, and will get the margins on IFL trader terminal. So yeah, so we will share the presentation to all of you. So Shyam is asking what is OTC and ETCD. So OTC is basically forwards market or the over the counter market, and ETCD is the exchange traded currency derivatives, that is the exchange market. And the contract size in OTC is generally starts from $1 million, but in exchange traded currency derivatives it is $1,000. So any more questions? I think there is one more question from Mehul ji. So does premium decay like in Nifty, Bank Nifty, just to gain theta benefit? Yes, there is premium decay in currency options also, currency USD INR. As the expiry comes near, the premium goes on decreasing in currency options as well, or as in USD INR options, the time value decreases, the premiums also decrease. So you can gain theta benefit by decrease in premiums. So any WhatsApp group, yeah, Rahmanji, there is WhatsApp group in which we share daily calls. So you can ask your relationship manager about that and just tell him that you want to be added in our WhatsApp group. So we will surely add you. So Mr. Samir is asking, end of the day automatic square off, is there any charges? No, there are no charges. So if during expiry client doesn't square off the position, then the position is squared off as per the RBI reference rate on that particular expiry date, and there are no other charges. And in options also, if there is in the money contract and client does not square off, there are no extra charges. Shami ji is asking, do you give advice as we are new to this topic? Yes, you can definitely call on our advisor desk number and we provide advice. What are the important data? आज कौन से important data release होने वाले हैं? What are the support levels, resistance levels? उसके हिसाब से आप trading कर सकते हो. We definitely give advice. If you call on our advisor desk number or the trade line number, we would be happy to help you. So Mr. Rahman is asking some of the best data available. Please share and explain to the client. So some of the data, that is the US employment data. So US का employment data अगर अच्छा है, if US employment data is good, then it will be good for US economy. So US dollar will become strong. And if India's inflation data is good, inflation decreases, it will be good for the Indian market and Indian currency. So dollar will depreciate if Indian inflation cools down. So these are some of the data. I hope I have answered your query, Mr. Rahman. So Rumpa Sharma is asking, can you clear once strike price interval in BSE and NSE? Yes, the strike price in NSE is 25 paisa. So for example, in NSE, the option strike price would be say 82, 82, 25, 82, 50 and so on. But in BSE, the strike price intervals are only 10 paisa. So for example, 82, 82, 10, 82, 20, 82, 30 and so on. So there are some more questions, I guess. So Mehul ji is asking, futures expiry is on weekly basis or monthly basis. So as I told you, there are weekly expiries also and monthly expiry also. So both futures and options have weekly as well as monthly expiries. Weekly expiry is there every Friday at 12:30 p.m. and monthly expiry is 2 days prior to the last working day of the expiry month at 12:30 p.m. Note down the time. Time is very important. Market runs from 9 to 5 p.m. But on the expiry day, the contract expires at 12:30 p.m. So, are there any more queries? If you have any more queries, do let me know. Otherwise, we will end the session for today. So, Mr. Rahman is asking, here option market is available. Yes, you can trade in both futures as well as options. Both the contracts are available for trading, futures and options. There are only two contracts in currencies, two products, futures and options. So you can trade in both. Is there any more questions? So Rumpa Sharma is asking reason of different charges in trading in NSE and BSE. So basically, the currency market was started in 2008 by NSE and BSE has launched currency market in 2013 only. And since the volume is less in BSE, to attract clients or customers, they have kept transaction charges low or the charges less in BSE currency segment so that people participate in BSE currency segment also. So hope the reason for different charges is clear. So any more questions? Do let me know. Otherwise, we will end the session for today. I think there are no more queries. So we will end our currency training program for today. Thank you all for attending the session and have a wonderful evening. Thank you.